Today I'm going to talk about the Roth IRA investment options, but it's not just about the options or the choices inside the Roth IRA. It's really about getting the Roth IRA to work as hard as possible for you. If this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, certified financial planner with Sickle Hunter Financial Advisors. So the first thing that we want to know is how the Roth IRA works. So the Roth IRA is a type of account that you can put your securities, your stocks, your bonds, your mutual funds, your ETFs inside of it. So what it does, it goes in after tax. So after you get your paycheck, that money, that's after tax. So the money that you have goes into the Roth IRA, it grows tax deferred, comes out tax free. So what does that really mean? You're putting after-tax money into the Roth IRA, so it's already been taxed. So let's say you earn $1 and we take 15% out for taxes, that's 15 cents. So 85 cents goes into the Roth IRA. Now, if that 85 cents doubles over whatever time frame you want to choose, it doubles, so it becomes $1.70. Now that growth, that 85 cents in growth, can come out tax-free, including the other 85 cents. So the full $1.70 will come out without any tax consequences after age 59 and a half. But if you pull it out before age 59 and a half, the growth could be taxable with a 10% penalty. So you really don't want to take out the growth before you hit retirement age or 59 and a half. So when we hear tax-free, we think that's a good thing. I want tax-free. Everyone wants tax-free. We want to pay the least in taxes as possible. But it's also important to understand that it doesn't reduce your tax liability today. That's where the traditional IRAs, the 401ks come in. That is reducing your taxable income today, where the Roth IRA will help you reduce it in retirement. Now, there's a good chance right now before retirement that your taxes are going to be higher than they will be in retirement. But of course, we don't have a crystal ball. We don't know where tax brackets will be. But generally speaking, if everything stays the same, then there's a good chance that you'll have less taxable income in retirement. Something to consider. Of course, that's not always the case, but you want to make sure that you're aware of it. When we're talking about the Roth IRA, you also want to know that you can only put in $5,500 every single year. Unless you're 50 or older, then you can throw in another 1,000, bringing it to 6,500. So there's another way that you can break it down. If 5,500 just seems too much, you don't have it lying around, but you still want to take advantage of the Roth IRA, save systematically. Put it in weekly, bi-weekly, per paycheck, or monthly. If you do it monthly, it comes out to about $458. It's actually $458 and 33 cents. $458.33 is the exact number that you can put in each month to get to the 5,500. So you can break it down so you make sure that you're using the Roth IRA to its full advantage. Now, another great thing to look at the Roth IRA is you can basically put whatever you want into the Roth IRA as long as it's a security. So you can have stocks or bonds or that hot stock tip that you heard at the last cocktail party that you were at, or you can invest in ETFs. So you can invest in basically anything that's a security inside the Roth IRA. But that doesn't mean that you should just go out and invest in anything that you want in the Roth IRA. There's also another term that you should become familiar with, and that's asset location. So you may have heard of diversification. This is asset location. And what that means is if we know inside the Roth IRA that our growth is going to be tax-free at some point, then we might want to put our more risky assets inside the Roth IRA, such as our equities or our stocks. So if we put the stocks in the Roth IRA and then our bonds in another portfolio that's going to be taxable, then we might be able to avoid more capital gains and more taxes than if we had put those bonds inside of the Roth IRA, which are traditionally the more conservative investment versus equities or stocks. And while it's important to have a financial plan and kind of know what you're doing in advance, if you're uncertain of whether or not you're going to need access to those dollars, putting the money in the Roth IRA, anything you put into it is called the principal. and your contributions, that principal, you can pull out at any time without any taxes or penalties. Now, don't make that an everyday thing where you're putting the money into the Roth IRA and pulling it out, because you can only put in up to $5,500. So you can't put in $5,500, pull it out, and then put it right back. You want to make sure that your plan is set, but if you want to know the flexibility behind it, you can take out the principal. Now, going back to the investments, you can clearly invest in just about anything. Now, not every investment platform is going to give you access to every single stock, bond, or ETF. So if you have a Roth IRA account at a financial institution and you're looking through it and say, wait a second, I thought I can invest in anything I want, you have to look at what they offer. So if they don't have access to certain ETFs or mutual funds or any other type of investment that you're looking for, then you just need to find the institution that can give it to you. And if you don't have access to a Roth IRA because you earn too much money, then you can look at a backdoor Roth IRA. Now, understand that when you're doing these types of conversions, whether it's a backdoor Roth or just a straight Roth conversion, you have to understand that you can't recharacterize them anymore. That is gone. So if you do make that change and you do take advantage of the Roth IRA conversions, then you have to understand that that tax that you're gonna pay on the conversion, you cannot get rid of and you cannot recharacterize any longer. So you do wanna make sure that if you're taking advantage of the Roth conversion or the backdoor Roth IRA, then you're looking at the tax consequences in that conversion, because again, you can't recharacterize and you're stuck with that decision. Although it could be the only way that you can gain access to the tax-free Roth IRA. The Roth IRA is a very powerful retirement planning vehicle that you should take a look at, and hopefully it can work in your particular situation. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.